Sorry about that. Sorry about that. Okay. Public humiliation. It's very, very good. Very, very. It's good. It's cathartic. It's cleansing. Okay. Thank you, Denny. Thank you, Franklin. Thank you. I got to acknowledge those who try to help. Devin, thank you. I need you. I absolutely need you. You are my audience / producers. Tim, thank you. Lewis, sir, thank you. Seymour Rivers, you were too late. I always rely upon you first for the audio. You were not here. I blame Seymour Rivers. How dare you? The public humiliation, I blame on Seymour. Welcome, Seymour. Tim, I'm gonna have to start over. Yeah, I will. Good evening, night from Moscow. Hello, Oleg. Good to see you again, dear sir, and community. Welcome aboard, my friend. Let's take bets on when he feels. That's so wrong, man. Devin, that's wrong. How dare you? How dare you? I can see his enthusiasm. Must be. Oh, if you can't laugh, what are you going to do? Thank you, Lewis. Thank you. Yoga Mac. I just got to, come on, get out. What is this screen that just popped up? Escape. That did it. Yoga Mac. Let's get you up here. Oh, wrong one. I'll see what I can do, Bob. Thank you. Now you're loud and clear. Good. Aces. Nose Goblin. Jesus, I haven't seen you in a while. Hey, Bob. How are you? Doing well. Thank you. I hope you're doing well. Hope all is well with you. Thank you. I appreciate that very much. Word for word, please. Thanks. Oh, it will do. Pete. Welcome, Pete. All right. So the ritual of audio humiliation has been complete. The commentary is very much appreciated, and you got to let it roll off like water off a duck's back, or else it's not interesting. All right. So tonight we're going to talk about DocuSign earnings. A couple of takeaways about the earnings report. We're going to talk about what their earnings were. We'll see if we have any forward-looking guidance. I didn't see any. The smaller companies, sometimes you don't get that right away. Maybe the call, they spoke about it. And I want to talk about the short interest on DocuSign and why there may be a lot more upside for the shares. We'll go over that. We'll do the calculation and see how many days to cover there are on those shares. We'll talk about our trade as well on DocuSign. So what else? We want to talk about something interesting happened today. Into the close, and this is what I was trying to get to earlier. Into the close, the yield, the 10-year yield down here into the close was rallying. What else was rallying? You had the tech sector rallying. Now, one of my theses, if that's a word, I guess my thesis for being short of tech stocks is rising 10-year yield above a 3 handle, weakness on tech. That was not borne out this afternoon. Let's face it, it was only a half hour, 45 minutes that you had a positive correlation. But it's something to watch out for. I'm not going to ignore it. Maybe things are changing somehow, some way. So we take this little event, we tuck it away, and we look for another event. And then all of a sudden we connect the dots and maybe we have a trend that's forming. So we want to stay cognizant. We don't want to get wrapped up in our thesis, because we, at some point in time, that thesis may not be right anymore. And we want to exit when it's appropriate, because we did open up shorts, reopened up shorts yesterday. We actually added to shorts today when the market looked like it was rolling over again, but it bounced back to close strong. So we're also going to talk about the weekly charts of the major averages, especially the dollar and the 10-year yield. Folks, the US dollar, very, very critical for our precious metal trades, gold, silver, and the miners. And I think it's time that you really start reevaluating the precious metal trade. For the first time in a while, added GDXJ to our long-term portfolio. I'm not ready yet to go long of call options yet on NUGT as a swing trade. If we close above 30.50, I think I'd be a lot more enthusiastic on NUGT. Right now, it's a little bit iffy. So we have common shares. We sold covered calls at the 30.50 strike price, expiring October the 7th. And that trade is working out well. We're buying NUGT at the lows. We're still down net on the shares, but we bought more. And we did so because we bought at a support level. So just to be careful, we sold covered calls. You're going to get backing, filling until you get a trend established. So let's get to it. Let's talk about DocuSign earnings. And they reported after hours today. And let's go to the report. All right, so we do have their forward-looking guidance here. So shares after hours rose 18%, and they upgraded their Q3 outlook. So you have forward-looking guidance, which is looking good for DocuSign. They beat on revenues. They beat on earnings. The EPS was 44 cents. They beat expectations at 42 cents. Sales, which is the number I really look at. You always want to look at sales versus earnings. You want to validate the quality of the earnings with rising sales because they can manipulate the EPS. You can't manipulate sales. So sales, they beat on sales. You have, I'm not sure why this is not an exact number, 624 to 628 million. Is this forward-looking guidance? Oh, no, that's the forward-looking guidance. Okay, now that makes sense. So their forward-looking guidance is a range. This makes sense now. 624 to 628 versus 625. So they increased the bottom line. So it's a strong result. EPS, forward-looking. Possibly a bit of a bump on a forward-looking time frame. So forward-looking guidance, strong. We're going to chalk that up. Big check, forward-looking guidance. So they beat on revenues. EPS, good numbers here. I think that DocuSign goes higher, assuming that the market goes higher. As goes the market, so goes DocuSign. If the market trades down tomorrow, you may have a honeymoon period where DocuSign trades up tomorrow. Don't expect it to last if the market rolls over. And remember, tonight we're going to be going over the Fed's balance sheet. There's a reason why we may head a bit lower tomorrow. I'll explain it when we get to the Fed's balance sheet. Let's talk first about the potential for a short squeeze on DocuSign. And this is why I went so far to the money in time and in price, because I took a look at this and DOCU, where is it? Why are you not coming up? There we go. So you go over statistics and they do give you, I never use this. I would never use this number. Short percentage of the float, 8.92%. Not a huge number, but when you take your calculator out and you say, okay, let's take the shares short, which is 17,590,000 ... divided by 3-month average daily volume of 4,830,000, 4,830 ... equals. That gives you about a 4-day short covering rally. So that's why I'm thinking that there's probably going to be more upside besides what we saw in the after hours session. So in the after hours session, traders were looking for, I should say market makers, They had an anticipated move of $8.70. So they missed on their expectations. So what was our trade here? Our trade, I'll even bring it up. Our trade was we sold a Strangle, and we sold the October 7th expiration date, 90 calls. Simultaneously, we sold October 7th expiration, 30 puts. So we sold the 90 calls, 30 puts expiring October the 7th. We generated a contract premium, we generated a premium of 56 cents per contract. 50 contracts, you can do the math. Now, the game plan tomorrow is take advantage of any IV crush. If we get a 25% decline in the value of the options tomorrow due to implied volatility contracting, and I'll show you what I mean, going into the close, the current IV percentile, what that means is that at the time of reporting earnings, over the past 52 weeks measured, we were at the highest IV percentile, 83 percentile. So very high on the range of where the shares are being traded on an IV basis because everybody's in there buying options, hoping for that big short squeeze, hoping they get it right. They bid up the options. What happens tomorrow? IV contraction. So all those traders, a lot of them are going to get wiped out. Some are going to make money, but most are going to get wiped out tomorrow. So on that contraction, we're going to be looking for, if we make a 25% profit, we're happy, we're out. I have no intention of holding it through to October the 7th. But I may, if we see a lot of pressure and no IV percentile drop or little, allowing us to make a profit, what I may do is roll up. Let's go back to the trade. Book profits on the put side. That'll be worth goose egg tomorrow. And a roll up to, say, whatever the implied volatility analysis tells us. We can go here, DocuSign. I like to use a 75% probability. We'll bump this up a little bit. So I may roll up the puts to, here's the October 7th strike, to around $45, $50 from the current strike of, where is it, 30 bucks? Yeah, 30 bucks. So we'll collect additional premium there. Now you can see that my current strike is within striking distance of the shares being reached, but in reality, even with the move after hours, there's only a 12% probability of those shares reaching our strike price by October the 7th. So we would hope to be out of this trade ideally tomorrow. If we can't get out of it, meaning they're pressuring our call side, I'll just roll up the put side to a 45, 50 strike, and we'll stick with it for a little while longer. So we'll make it profitable. Let's go to comments. Any questions whatsoever? All right, what we got? Falcon, hey Bob, just landed in Newark. Oh, I feel bad for you. I hate that airport. For a 3-day trading boot camp. Oh, awesome. First time in New York. Been a bucket list. Good for you. Where are you going in for trading boot camp in New York? Out of curiosity. Wing. Okay. 9/11 Patriots Day on Monday. Yes. Sign of the cross. If they want to pump it up for America, yeah, that's what's going around a lot. America. I'm in on puts for the SPY. Okay. Yeah. Strong close today. I wouldn't be in a rush to put that trade on. And I'm short. I'm short the Qs right now. So I'm telling you, as a person that's got skin in the game, I would wait a little bit. See how we close out the week tomorrow. And we'll go over the weekly chart to see how we're going to close out the week in a moment. All right. Let's take a look at the Fed's balance sheet. That was released after hours. And what you're seeing here, is another weekly lower low. Folks, the Fed's balance sheet is now at its lowest point since January of this year. We're about here. We're down from last year, the week of the 12th. We're about there. So the Fed's balance sheet continues to drop off. What this is going to do is it's going to pressure yields as the TNX yields up higher, especially if they raise rates again in September, which is widely expected they're going to. The argument is 50, 75-point basis hike. It's a foregone conclusion. So is the bond market, is it priced for that increase in yields? I don't think so, because we broke down last week, continuation move lower this week. Now, what we might get on the bond market, remember, if bond prices fall, bond yields go up, right? If bond yields go up, that's no bueno for equities. So we have a continuation move lower week over week, forcing yields up higher. What we may get is a relief rally on the Fed news. That's going to be in the rearview mirror. We'll probably rally up to, I don't know, 111, maybe 112, and we'll see whether or not we can recapture that support level. My guess is we fail and we roll over more. And that's going to send this yield. We're going to be flirting with a 4 handle. I think we could be at a 4 handle on the 10-year yield by the new year. So that's why we maintain a short position as much as possible nowadays on the market to try to hedge our own positions. Not that I want to be net short of the market. What we do here is we sell a lot of premium. So we're exposed to both the long and the short side. So if we get a big binary event, meaning a big bank blows up, war, whatever, we're exposed. So I need that hedge on to protect our position so we can generate cash flow and I can sleep at night. But moving on to the tip market, Treasury inflation protected securities continue to take it on the chin this week. This is the tip market thinking that, and I think they're wrong, the Federal Reserve got this. They got this. They're going to kill inflation. They haven't even begun to fight. What? This little drip, drip, drip over the balance sheet? We're only at lows since January of this year on the Fed's balance sheet. They were supposed to be billions upon billions of dollars lower as per their own statement, and they didn't do it. So the tip market is believing the Fed because you buy these instruments to protect against inflation, and it's yielding 7.61. Do we get a higher low? I think we head down here to 1050, 110.50. We'll see whether or not we rally. And with all these charts, folks, as I'm discussing them on a weekly time frame, remember, one trading day left to go. A lot can happen. So we saw this not last week, but the week before. I was going over the Thursday night charts. Everything looked good. Strong week. That Friday, hammered. Everything changed in one day. So be careful with what we're talking about tonight. A lot can happen tomorrow to change the entire outlook. We can go from bearish to bullish or vice versa. Now, this is the chart that I'm most interested in above and beyond anything, and that is the U.S. dollar. The U.S. dollar has benefited from Ukraine, the war in Ukraine. It has, because it's the fear trade, although it was not reflected in gold. You have also seen the dollar benefit from being it's the first currency to have experienced any measurable interest rate hikes in years. That's all changed. The ECB raised interest rates by 0.75 basis point today for the first time in 12 years. So now you're seeing a tale of two currencies. Now, why is the euro important relative to the US dollar? If you've ever heard of the Dixie, let's bring it up. Oh, they have it here on the different symbol, USD. If you've ever heard of the Dixie, that's a basket of currencies that floats against the US dollar. And the euro makes up 55% of the opposite currencies trading against the US dollar. So the euro is extremely influential relative to the US dollar. So the question is, okay, so the Federal Reserve has been raising rates, reducing their balance sheet. The ECB today, their version of the Federal Reserve, raised interest rates by 3/4 of a basis point for the first time in 12 years. What happened? Initially, the dollar rallied. The dollar rallied, and the euro went down. And I said, no, 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 this is all wrong. This is wrong. So in the end, by the end of the day, you take a look at the dollar. The dollar reversed to close down. This is not a broken chart, but it's not looking good for the US dollar. What did the euro do? The euro weekly time frame on the euro bullish key reversal bar. If you're not familiar with what a bullish key reversal bar is, or some of the other terminology I use on charts, link below. 5-part free video tutorial on my top 5 favorite candlestick patterns. This is one of them. This is a very, very powerful candlestick. And the other thing that we're loving about this chart, volume. You got volume here. So when I see something like this, remember, we drew this a couple of weeks ago. The MACD, very, very oversold. We drew this a couple of weeks ago. Higher lows in RSI. Folks, we're getting ready for a breakout on the euro. What happens to the dollar? If the euro breaks out, it doesn't mean the dollar drops like a rock, unless, of course, the yen breaks out too. We'll take a look at that in a moment. You get those two currencies trading in tandem, the dollar goes down hard. So right now, it's just the euro that has me very bullish on the euro, bearish on the dollar. But we don't have a breakout yet. Volume awesome. We're seeing RSI diverge, where we've been seeing lower lows and lower highs. Didn't mean to do that. Lower lows and lower highs on price. You're seeing higher lows, and all we're missing now on a weekly time frame is a breakout on RSI to a new higher high. If we get that in advance of price breaking out, that's simply something that we've seen constantly. This is why we put our markings on these oscillators, is because we want to know when we have an oscillator leading price performance. And right now, we're setting the stage for that to occur. We'll be talking about this more with members on Saturday when we go over the closing price action for the week and draw up our strategy session for the new trading week. So euro looking very, very good here. One trading day left to go. Let's save this. So how'd the yen do today or on the week? The yen is not good on the week. We are seeing a parabolic move lower on the week, but I think this is a bullish setup. I think this is capitulation for the Japanese yen. And when you take a look at the RSI, while we're making lower lows on price, RSI is not validating the new lower lows. So it's no reason to go buying the yen yet. It's just something to watch. And if RSI continues to stair step up higher while the yen continues to move lower, that's a bullish divergence. That's good stuff. We want to be aware of that and take advantage of it before other traders are, just like we did with the euro. So what does this all mean for us? Why are we so concerned about currencies? Well, currencies are a thing of the past. The United States and Europe, at least Western Europe, just don't understand it yet. Fiat currencies are a thing of the past. Paper money IOUs printed by the West will not be here in a few years. You have the BRIC nations lining up. They're going to form a commodity-based currency. What that's going to be, I don't know. Oil, gold, silver, backed by all that good stuff, real tangible stuff. rather than printing presses sending off dollar bills and the United States getting free stuff like we've been doing since the end of World War II. Those days are coming to an end. Doesn't make me happy to say that at all. But we have successfully killed the golden goose that has been giving us so many golden eggs for free for so long. Now, I want to take a look at the yen on a daily chart to see how it responded. I already had it up here. Okay, good. Not horrible price action. No new daily lower lows. Volume is still high, but you had an inside day on the yen today. When I see volume like this, I would expect to see down volume big like this. I would expect to see a big down move. It didn't happen. We were down 0.14%. It's an inside day. So when I look at this, I say, okay, this is exactly what I said the other day about the US dollar. When it put in big volume, this is probably the top on the US dollar. I'll go to that chart in a moment. This is probably the bottom for the euro. Short term, good swing trade here. And I said the same thing about the dollar back here the other day when we saw the biggest volume bar of the year. I said this on market wrap is probably the short-term top for the US dollar. And it looks as though that's what's happening here now. Even though the dollar bull ETF closed up today. Strange that the Dixie closed down. So that's why you need to take a look at the underlying relative rather than just the ETF at times. Sometimes they diverge. But the dollar was down today. Let me take a break here, go to comments. Yoga Mac is typing out chapter and verse. If they pump, I'm in on the puts. Yes, I would sell strength, definitely. Party bonds, stock B at... okay, gotcha. Oh, this is my grandfather went to school there. I honestly think they have to control population. Well, you take a look at the World Economic Forum, that lieutenant of... I forget his name. I gotta play the video one time. He's a demon. He is a demon person. That World Economic Forum, there are some bad people. A little bit of trivia here from Yoga Mac. I expect nothing other than original content from him. Queen on Guinness records for being on 33 currencies. All of those currency stamps and flags will change. Monitor the symbols. 33 Freemasons. Okay, madman. All right, and our prayers to the Queen and anybody that all of her family and subjects. Like and subscribe to Bob and the Contrarian Crew. Yes, thank you. Yes, please, folks, help me out. Help me out the YouTube algorithm. Learn how to judge the markets like it's contrarian. Yes, sir. Thank you for that. UK CBDC Canadian. Yeah, they're coming. They're coming. They're probably going to base. I read an article. I wanted to bring it up tonight. I just didn't have enough time to prepare tonight. They're probably going to base. They're not ready yet with these CBDCs. They're probably going to base it off of Ethereum. And yes, what's going to happen here is that they want negative interest rates. They want negative interest rates. So how can they do that? The only way to do it is by putting an expiration date on your currency. So if you're paid, it's one day, the way it's going to work out is this. It's going to be a 3-day weekend. After the markets close on a Friday night, there'll be an announcement that the banks will not open the following week. Markets will be closed, and that you'll get one Fed coin, whatever they're going to call it, for every $10, whatever the ratio is. And then you're going to see pitchforks in the streets because nobody's prepared for this. I talk about it all the time. Nobody's prepared for it. I shared it with my father a few weeks ago, and he didn't know about it. And he started talking to other people that are in finance, and they don't even know about it. So it's coming, and it's not going to be a pretty event. That's why I strongly advise. Well, I can't advise. I strongly encourage people to buy precious metals, physical, not electronic, physical. What does that do to bonds? What would that do to bonds? Good question. I think I think there will be a crisis of confidence. Well, they're going to all act in they're all going to act in conjunction with each other. It's not like the United States is going to close overnight. They're all going to come out and they're going to do it at one shot. All the central banks, at least the Western central banks. Uh, I think just before it occurs, you may, if the Chinese are not involved with that swap over, remember the Chinese hold, this, I think they're still the largest holder of U.S. Treasuries. You may see a big spike in yields and a dump on Treasuries because they're going to know. And you see that. That's how you know the end is coming. And they close those, they close the markets and the banks for a week. It's going to be a different world. It's going to be completely different world. Your social security number, you'll probably be prompted to click on a link, enter your social security number, your bank accounts over with Citibank or JP Morgan, wherever you bank with, they'll be gone. They'll be gone. All that money is going to be transferred over to a Federal Reserve account. You will then enter your social security number or other unique ID that they've designated for you. Enter that. You'll access your new digital tokens. So that's when game over. Game over. Call your there's I think there's an executive order that's supposed to go into effect in December. I got to look that up. There also is legislation in Congress. Call your senator, call your congressman, say, we see you. We see you. Do not pass this stuff. Call them ahead of the midterms. They say buy 30-year bonds when it crashes, but I don't know what will happen to bonds when CBD. Neither, to be honest, I don't think anybody does. Nobody really knows. Who's going to want to buy them? Who's going to want to buy them? They're I don't know how they get around. They have to make money good on the interest in dollar terms. So, or else we default. It's a default on our debt. If you're going to say $10 is now worth one Fed token, who bought into that nonsense? So I couldn't imagine the buying power is going to be the same with one Fed token as is $10. But what do I know? It's going to be interesting. Have a little bit of gold in the ground. All right, let's move on here. What's the VIX telling us about a move higher, move lower into next week? Right now, it's saying stocks are going up. That's today. A lot can happen tomorrow. We are holding the 50-period moving average on the week. Let's go to a daily chart. I want to bring up something here. VIX is really trending lower here on RSI. Really, really weak. So we're in a downtrend channel on the VIX, and this could explain the irrational behavior of the VIX, where you've seen the VIX close up along with stocks some days and some weeks, and down some days with stocks. It just hasn't made sense. But this is kind of interesting here. I hadn't paid a lot of attention to it, but we are seeing lower highs and lower lows on the VIX. The VIX is weakening up in terms of momentum, which is stock market bullish. But I want to point something out here is that we are possibly putting in a higher low here on RSI. So the jury's out, but we are down below 50. So rallies tend to fade, as we've seen this past week. We rallied early on in the week, and we're now lower on the week. Today, horrible price action. I suspect that we're going to see lower lows tomorrow. We'll see whether or not we can hold that 23.19 mark. If we close down below it, we're probably going to see a rally into next week. If we hold it and if we see a reversal bar tomorrow to the upside off of that 23.19 mark, that's not going to be good for equities going into next week. So tomorrow's a critical day for the VIX. At this snapshot in time, it looks stock market bullish for the VIX, but we'll see by the end of business tomorrow whether or not we want to stand by that or has things changed. The transport. They're down on the week slightly. Call it flat. Sorry, folks. I had it's Greek spinach pie. Oh, so good, but a lot of salt. So we broke support last week. Is this a retest of the breakout point? Maybe. Or breakdown point? Maybe. Volume is trending lower on VIX, daily chart. They're trying to recapture 13.8. How was volume today? Volume was decent. So you can see what they're doing here. They gave up support on the 6th. Retest 1, retest 2. Stokes are rising. That's bullish. Jury's out here for the transports. As go the transports, in all probability goes the rest of the market. Now, the Dow Jones weekly chart is up strong on the week. We're up 1.46%. Bullish key reversal bar on the week. Again, folks, one of my top 5 favorite candlestick patterns. 5-part video tutorial below. Use the link. It's free. Bullish key reversal bar. Off of support. Good looking chart here. How's volume? This is wrong. This is inaccurate. Let's go to the DIA. Very low. Very light volume. Bob, thanks for reading my post. Just want people to be aware so adjustments can be made when necessary. Absolutely. That's why we're here, pal. It's not my podium. It's everybody's podium. If people have something positive to share, absolutely speak up. And we're here just to chill and, be on the right side of history as much as possible. So thank you, Yoga Mac, as always. All right. So spiders, bullish key reversal bar. Up 2% on the week, a little bit more than that. Volume light, though. Daily view. I'm not buying it. I'm not buying it. Let's check with the after-hours session. Hold on, I'll be back. Smelling a rat here. We're up in the after-hours session. We're flat. Looks like they want to move up higher tomorrow. S&Ps and the Qs. Dollars week yields coming in. VIX is doing nothing really. So we'll see how it plays out. Usually these charts change quite a bit after 8 p.m. Eastern Standard Time. That's when the after-hours session for regular traders closes. Asia begins to open up, then you get Europe, and these charts kind of really change dramatically after 8 p.m. Eastern Standard Time. So not much to look at right now, but I'll be looking at it later on. So what I'm sensing here on the S&P 500 is that we have an effort to try to recapture the 40, what is this mark here? So let's call it 401. And who said that earlier? Was it Yoga Mac? I think somebody called that level. I still wouldn't short it here. But somebody wants to remind me they can take credit for it. It's going to be interesting to see whether or not we close above this resistance level tomorrow. A lot of sellers up there. Volume on the day today was very strong, above average volume. So we're not going to ignore that. Qs, weekly chart. We have a short position on the Qs. Currently, we're underwater on that position, but we're still we still made money on our prior short. So net for the past few weeks, we're still very profitable on a short trade. On the week here, if we close up like this on the week, and we make a new weekly high next week, I'm probably going to close out the short trade. I'm not going to fight the market here. You gotta trade the market that you're given, not the one that you want. So I'll give it a little bit of room here, but tomorrow is going to be a very important day for us because I won't go adding more, but I may need to take some off. So we have the 20-period moving average, which does act as resistance immediately above. In fact, you probably can't see it on your end. This green line, that's where we stopped today, was the 20-period moving average, weekly time frame. Volume on the week is light. Daily chart. Daily chart, Bob. You can do it. Closed above 300. I was hoping that it wouldn't, but it did. Next stop, 30. Let's call it 303.50 for the Qs. The banks. I spoke about this last night, that the banks were looking interesting. On the week, the banks are looking awesome. Not only is this a bullish engulfing bar or a bullish key reversal, it's also this. A higher low. Now remember, the banks do really, really well in a rising interest rate environment. So we'll be looking for a breakout here on the banks. We may even do something before they break out, but the banks are looking very good. Daily chart. Really nice day today. Wow. Really nice day. Recaptured support, XLF. Now, the reason why the banks do well in a rising interest rate environment because their NIM, net interest margins, expand. They make more money off their loans. Simple as that. Technology, bullish reversal bar. I'm going to blow through these because we're getting long-winded here. We got 10 minutes to go. I want to make sure I get some charts requests in. Semis bullish reversal bar up nearly 2% on the week. LABU, bullish key reversal bar. We're probably going to be adding more to this tomorrow if it closes strong. Higher lows, RSI, higher lows, Stokes. Very, very good weekly chart. LABU is a leveraged ETF biotech, not for the faint of heart. We're right at resistance at a 10 handle. We close at 9.72. If we close above 10, we're probably going to be adding more to LABU. Moving on. Staples, consumer staples, bullish reversal bar up just shy of a percentage point. Nothing really to do here. Discretionaries, a much stronger week, really strong week here. Frankly, shocking. Up 3.81%. One of the best performing sectors. Emerging markets. Okay, we pulled the string, or not the string. We pulled the trade button on our strategy for emerging markets. And what that strategy is that we've spoken about this quite a bit, that I want to get our currently strong US dollars into offshore companies. So the game plan has been to find a fund that has no Chinese exposure or limited Chinese exposure, but is in the Pacific Rim, emerging markets. Why is that important? Well, first off, China is a very corrupt country. At some point in time, we're going to slap sanctions on them. I don't want to be invested in companies over in China that are going to have sanctions slapped on them and then possibly being knocked off of SWIFT. We want to go to war with China. I don't want to do it. Our stupid government does. So inch by inch, step by step, they're going to take every chance to poke, prod, cause a conflict. Because when your policies are poor at home, you generally go to war. I don't make it up. It's been that way for the millennia. So we are taking our way overvalued dollars and we're taking them and putting them in overseas companies outside the jurisdiction of the United States. And that's where we're going to be placing our bets, because when the dollar falls, those companies do better because it's like a tax cut for them. So it behooves us to be in South America. It behooves us to be in Asia, ex-China. So that's the game plan. And I forget the name of the symbol, to be honest with you. I think it was iShares. Here. iShares MSCI Emerging Markets ex-China ETF. It's been beaten like a pup. Let's go to a weekly chart. All-time highs at 62.44. We began bull operations yesterday. Why? Weakening US dollar, strengthening euro. Simple. All right, moving on here. West Texas Intermediate crude. Currently down below support levels. Crude is really, really weak. And that's allowing stocks to rally. Daily view. We popped today. We're still oversold on Stokes. I think oil goes higher. Briefly higher. Short covering rally, and then we roll over again. The global economy is slowing down. Gasoline prices getting hammered. Home heating oil. I got a delivery today, charging me an arm and a leg. Rolling over. Okay, that's a good thing. All right, let's talk about gold. Gold was down today. It should have been up. It was down. I don't know what's going on with gold. Maybe it's the Colmex manipulators, the hoodlums over in London. Not quite sure. But gold remains weak. I have been bearish on it. I think if you're going to hold it for the long term, you got to buy it at these levels. As a trader, would I buy more right here, right now as a momentum trade? No. Volume to the downside was weak this week. Pardon the pun. Daily view. Let's take a look at a monthly view. We're just off of support. All right, daily view. Should have rallied today. It didn't. And every reason to rally. What I will point out here on the gold is that we broke down below support, then rebroke out on the second, retest yesterday, and an attempted breakout today before it was rejected. So I think things are firming up here on gold, but I wouldn't be a buyer as a trader just yet. All right, GDXJ weekly chart. At current, we're above a resistance level. We'll see how we close out the week. Do we close here? That's the big $600,000 question. Do we close above this mark? We didn't close with a 30 handle. Close, but no cigar. Nugget. We have a significant position here. Bullish key reversal bar. And resistance is going to be up at around, let's call it 27.50, then 28.30, and then here's the Pimp Mac Daddy of resistance level, right at that $31 per share mark. If we close above 31 bucks a share on a weekly time frame, I'd be selling naked puts on Nugget. What else do we have here? I think we're good. Let's do some chart requests. Want to make sure that we have nothing in the members area. So that members pissed off at me if I forget them. And Larry, we did PNRG on the 4th. Yes, we already did that one. Okay, cool. All right. Let's take some chart requests, and then we will say adios, amigo. Trader Isaac. Hello, Bob. Hello, Trader Isaac. How does GSL look? Bottom in. Let's bring it up. Let's talk turkey. GSL. Daily chart looks awesome. Folks, this segment is brought to you by our friends over at TrendSpider, automated technical analysis. I'm going to show you what automated technical analysis looks like right here, right now. 35% discount code below. Cheapest price on the web. Take advantage of it. So why did I say that this chart looks really, really good right now? How was I able to conclude that? Simple. I couldn't do it with this view. I was able to do it because the algorithm said we broke out. Simple. So we broke out here on August the 1st, pulled back, did a retest, and we held, again, automated trend line. Even a dummy like me who can't unmute his mic before a show can use a TrendSpider. So we hit the support level, rallied, pulled back down to another support level, rallied, stalled out because you wouldn't want to buy it here. But today it became a buy. So it looks as though what we're going to do here, Trader Isaac, is probably pull back, do a retest of the breakout point. Maybe tomorrow, that's your time to buy. I would set a stop loss just in case we close back down into this trading range. But I'm liking 18.20 per share, give or take a dime. Let's take a look at a monthly chart. Normally I start with higher level views. The one thing I would be cautious about here is in your position sizing, because you do have a lot of overhead supply immediately above at around the 23 mark. So just be aware, when you enter this, there are a lot of sellers back here at that level. They want their money back. They're not looking to make a profit. They're going to dump. Weekly view. And we do remain on a weekly time frame in a downtrend channel, right? So again, here's where the trend lines, take them off, tell you a story. Upper band of resistance, lower in orange, lower band of support in blue. We were in a rising uptrend channel, and we broke that uptrend channel the week of June the 13th. So this may be a consolidation area. If they trade options, maybe you want to enter the trade, sell some near-term options as a protective hedge. But just be aware, you're in a downtrend channel, weekly time frame. I like the daily chart, but the weekly chart's giving me a little bit of concern. Now, if we broke out above this upper band of resistance, no sensitivity. All we care is a close above that mark. And we'll keep this active for a month. And there you go. RIVN, right? Rivian Yoga Mac? RIVN. Not a ton of data here. Oh, beautiful day today. I see why you're asking. We broke out the 29th of August, consolidated, and we broke out in earnest today. I think we're coming up here to 38.69. If we see a close above that mark, remember you had resistance back there on August the 12th. If we close above it, we're heading up here to this rising upper band of resistance. Rivian's looking pretty good as a trade, speculative trade. What do you think about it? Let's bring it up. I'm going to leave it off with this one, folks. Snap. Monthly chart looks horrible. Lots of resistance immediately above. Weekly chart. You're seeing some buying interest step in here. All right, so keep in mind that the algorithm's picking up resistance immediately above. I'd be a buyer on speculation. I don't like this company. I don't like any social media company. I would wait for a close above 1275 on Snap. If we close above that mark, next target is up to $15 a share. I'd be out. On Rivian, I'm not sure, Yoga Mac. I would check the news on that. All right, guys. Folks, thank you for being here. I really appreciate it very, very much. Everybody have a profitable trading day tomorrow. Please hit the like button, subscribe button, whatnot. And my pleasure as always for being here. Thanks for your participation. Shout out to all those who reminded me about my mic being off. Thanks for the laughter. And everybody have an awesome night. Be well.